Get Rich Slow with John Wolfe. Hey, I think that one of the biggest reasons that people avoid or are leery of zero down programs is because they're afraid they're going to get ripped off. So today, let's talk about a zero down program that I think rips people off. So first of all, I do want to say this is a real program, which some of the programs out there aren't. You may very well qualify for this program. I just think it is a horrible deal, and I'm asked questions about it often. So I'm going to try to explain how and why it's a horrible deal. And I'm also going to describe a good zero down program that is available in the Portland metro area so you can kind of weigh them next to each other. Okay? All right. So there is a program called Chenoa Fund. And Chenoa Fund is totally a real program. Very strange names and symbols on their website, but it is actually a more or less nationwide down payment assistance program for FHA. Now, all of that sounds fine, and all of that is fine. But when you look into the specifics, it's much, 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 much less attractive. So let's just talk about the math a little bit here. So normal FHA is 5% down. There is a upfront fee within FHA that's 1.75% of the loan amount, but they roll that into the loan so you don't have to pay that upfront. So other than some closing costs, which $4,000 is a kind of normal number, which the seller is allowed to pay, by the way, you can do FHA for 3.5% down, right? Okay, cool. So unfortunately, the seller can't pay that 3.5% down. It has to come from you or partially from a gift from family or something else. So that's where a down payment assistance program comes in, right? Exactly. So what will Chenoa give you? So Chenoa will give you that 3.5% down, but, and these are some pretty big buts. I'm not going to go through all the program rules because a lot of people really will qualify, but the buck's a big but. So remember how I said a normal FHA has 1.75% cost up front? Well, all of the other costs for the loan, and this does vary, add up to about 1%. Now, I just want you to hold that into your head. So, if you were buying a $400,000 home and you didn't have any money to put down and you weren't getting any help with seller credit, for the loan costs itself, I'm not talking about taxes and insurance, you should expect to come out of pocket 3.5% plus about 1% in costs. The real costs for doing a loan, appraisal and everything are pretty close to 1%. Now, if you go Chenoa Fund, those costs will be 3%. I know the program makes it sound like it might not quite be 3%, and they do have to actually round down, but it's going to be 3%. So to review, you're going to have to either come up with 3% down yourself instead of 3.5, or you're going to have to get the seller to give you 3% towards closing costs, which is a big ask, in addition to any taxes or insurance you have to prepay. Now, it actually gets worse. So this loan doesn't compare one-to-one with interest rates with normal FHA. So right now, normal FHA are floating around 2.25 and 2.75% interest. Chenoa Fund is 4.5 to 6% interest. So I've only done this math once, and I didn't want to recalculate it all for this video, but I had a client about 1.5 years ago who did actually qualify for Chenoa Fund and didn't quite have the money down to put the down payment. And we did all the math for Chenoa Fund for him. And one of the things about Chenoa Fund is it doesn't give you that 3.5% as a gift. It gives it to you as a loan, which is forgivable over 10 years. But if you don't make every payment in the first 3 years, you have to pay it back. There's a whole bunch of like ifs, ands, or buts about it. But basically, it's more or less impossible to get out of that loan in the first 3 years. So the difference between them putting 3.5% down and doing the Chenoa Fund was going to be something like $12,000 up front. But the cost for just having that loan for 3 years until they could refinance was going to be well over $40,000 real money lost. Like, oh, that's painful. That really is painful. And that client was actually able to get a relative to help them with about 2% of the down payment that they needed help with. And they got their home at way better terms. So how does this Chenoa Fund compare to some of the other better zero down programs? Okay, so the Chenoa Fund, just to review, and it's basically only FHA, you're going to pay, let's base this on a $400,000 loan. You're going to pay 1.75% rolled into the loan up front. You're also going to pay 3% cost up front, so 12 grand. And then you're not going to have to do the 3.5%, which I think is about, what is that, $1,350? You don't have to do that part. But you did have to do the 12 grand or get the seller to pay the 12 grand. So the seller is going to want to increase the purchase price to cover that. Here's another way of doing the same thing. So State of Washington has a fantastic zero down program. And let me give you the long and the short of this one. So State of Washington has their zero down program. The last time I looked, it was FHA, higher income cap than Chenoa, 3.5% interest FHA, and the seller didn't have to contribute anything special. So just quick and dirty math for the Washington bond, you not a percentage, but you have to pay $1,500 towards the loan, and then 0 extra percent, and then 3.5% interest, and you do still have the 1.75 laid in. But the difference in cost compared to those two programs is just 9 days. So one of them is $1,500 flat, the other is 3% cost up front, and the 3% cost up front is also over 5% interest. The $1,500 flat one is only 3.5% interest right now. And that does bounce around, but they're not similar. Now, one thing you could point out is that if you pay the crazy high interest rate of Chenoa Fund for 10 years, the loan is forgiven. That is true. The Washington bond, the loan's never forgiven, but you also don't pay any interest on it. It's a zero payment, zero interest loan. You pay it off either when you finish paying for the house or when you sell your house, even money. It's a great deal. Anyways, if you have any questions or interested in other programs, please reach out to me. John Wolf, Get Rich Slow with John Wolf. Smash that like button. Have an awesome day. Bye.